Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back friend of the pod, Jeremy Yea, Senior Valuations Editor at CAP HPI. And he's joining us for this exclusive roundup of how trade values performed in June. Now, last time we spoke to Jeremy a month ago, he reported ongoing price stability, which resulted in used car trade values dipping just 1.3% in May, very much in line with the average for the month. And he was forecasting a small dip for June. So we're about to find out if that welcome stability continued into June. And in the second half of this pod, we'll look at some of the trends CAP HPI has identified over the first half of the year. So welcome back to the pod, Jeremy. I suspect you've been very busy data crunching.
Absolutely. Morning, Curtis. Morning, Phil. Yeah, super busy in the build up to the end of the month, as usual.
Yes.
Yeah, more work than usual as well, I think, this month with Chris being away. So you've had to do the multitask, should we say.
Just a little bit extra, obviously. But yeah,
you're there.
It's been a busy time.
You've made it. You're there. You've done. Editorials out. Month's closed off. And now you're just tidying up.
Yeah, indeed.
Then back to looking at the live data again. Very quickly.
When one month finishes, another one starts.
Exactly. It doesn't stop, does it?
There is no pause, is there, Jeremy?
No, definitely not. You can sort of, wipe your hands, think, well, that's all done. It's straight into the next month, which is always good. You
don't have the privilege of the pre-live days where they had the month to work and everything before pressing the button. But you've got to be live all the time now, making sure it's up to date.
Yeah, it's constant.
It is. So, as Curtis said, welcome back. It's great to have you back on. And as Curtis said, we're at that sort of half-year point now, but we'll get onto that later. So, let's talk about the sort of June figures as we move into July at that 3-year 60 point. And, what is the headline figure? And how does that compare to previous June to July movements from within the live data?
Okay, so we the month ended a 0.6 down, which is really positive, especially for June into July for monthly products. Average seasonal movement is a 1.1% drop, so 0.5% stronger. I think that really does signify another solid and stable month. I don't want to keep talking about the S as we did on previous pods, but it is there. It still exists in the market. A really, really good month overall. Positivity. There are some exceptions to that, which we'll come on to in a bit. In terms of how that, I guess, looks at when you look at previous June into July, last June to July was the strongest at 0.1 down. But you've got to remember, and then put it into context, that there was a really sharp alignment at the back of 23. During that last quarter, when values moved sort of over 10%, which was a record really in any given last quarter. So that sort of brought in stability through the beginning of last year, a really good year. So hence why it went down 0.1. The year before it went down 1.4. So there was that was the start of the realignment of 2023, if you like. 2022 was a 0.9%. So a 0.6 is the second strongest movement we've got on record if we exclude the two COVID affected, or the back end of coming out the other side of COVID, 0.6, and that was down in 2018, and that was the year we dubbed the year of the used car. So yeah, it's been a really, really good and interesting month.
Now, Jeremy, we'll look at fuel trends in a moment, but before we do, were there any notable price movements by age points for the month?
Yeah, it's all quite, I guess, similar across the age points, actually. The 1 year 10K, that was down 0.6. That equates to about £175. A 5 year 80, that went down 0.7 to slightly more than the 3 year. But again, small pound note movement of around £70. And 10 year 100K, down a bit more, 1.6% overall, but 1.6% of a smaller pound note movement equated to just over £60 movement. So again, pretty good across the board. I think it's interesting when you look at what we saw going through the month. The month of June sort of brought in, I guess, week on week, like improvements, and that was improvements in price performance, and that was improvements in conversion. It's probably important to highlight that a lot of prices didn't exceed cap clean, but they certainly edged closer back towards cap clean week on week through June. So yeah, there was more players coming back into the market, a few more franchise dealers around, giving a bit more competition to maybe some of the supermarkets and independents. Yeah, and ended up to be a really good month.
And how did the various vehicle sectors perform? I should imagine the prospect of good weather meant it was another good month for coupe, cabriolets and convertibles.
It was, yeah. Coupe Cabriolet went up 2%, just over 2% at 3 years 60, and True Convertible, they were down, went up 1.1%. So again, another month of, I guess, carried on the good weather, the seasonality anyway. Yeah. But yeah, we've had a long period of good weather, and it's likely set to continue for a little while yet, I think. And yeah, that's definitely, they've ridden a wave of good feeling, I guess, in the market, if everyone's been enjoying some good weather.
Yeah, and not such a good month for MPVs, was it?
No, MPVs did fare the worst. They're down 2.4% again. That was on top of 2.5% last month. So they've really fallen out of vogue, I think, with some buyers and retailers potentially. Might be a little bit of condition in that as well, in terms of coming back from certain channels. But yeah, I think the rise of the SUV sector, I think, has overtaken some of the MPVs, and you could probably argue it's a bit of a dying sector. But yeah, in terms of the other sectors, everything more or less fell in line. Certainly the mainstream sectors fell in line with the overall average. The strongest in terms of the mainstream was Super Mini. That was down 0.4 at 3 years 60, which is really positive. Lower medium, the sector I look after, which is the medium-sized hatchback, that was down 0.6. Upper medium was the A45 series. That went down 0.6 as well. But SUVs overall, the largest by far in our data feeds across the market, only down 0.7. So yeah, really, really, all the mainstream sectors bang in line with the overall average.
And turning to our popular conversation daily, I think you and I, Jeremy, fuel types, and what's happening in, once again, the battery electric vehicle, sector remains our key topic of conversation, doesn't it? And following those points of several months of softening, how did that perform in throughout the course of June into July? What's happening in that EV sector? Because as we say every time, the devil's in the detail, and there's a lot of, let's say, volatility and activity in that sector at the minute, isn't there?
Yeah, it'd be no surprise that BEVs are the weakest fuel type within, or drivetrain within our monthly movement. Again, 1.8%, but that's not as bad as what it's been in the previous 2 months. It was 2.7 and 2.8 back to back, so it has eased a little bit. But I think, as you rightly referred to, it's hugely varied within that. I think it's difficult when you talk about it as a whole, because there's different models at different points in their life cycle, which are, I guess, competing with peers. Manufacturer push, it's certain, in the new space, pre-reg, there's a bit of that in a minute. We're seeing big discounts, lots of different levers being pulled by OEMs and dealers to attract those retail consumers. And it's just remained volatile across the board. But again, there are positives to it. There are lots and lots, thousands upon thousands being sold now every single month, which is good, and often they do sell at first entry point, and the conversions are pretty good. But they still do sell on price. It could be based on what I've just said about some of the manufacturer push, but also there seems to be this consistent feeling of, when a buyer bids, or the purchase price of a vehicle, it is generally behind cap clean, because we're almost trying to build in insurance from month to month, in case of, but that's a downward spiral, a self-fulfilling downward spiral, which just remains, and it just is consistent every single month. But like I said, it is more positive than the previous month, so let's just take a little bit of positivity out of it, even though it is the worst performing drivetrain.
Yeah, no, I think you're right, and that's where that's the bit that you try and manage at your end, isn't it? That because people are cautiously buying because they're concerned that if that vehicle goes over a month, then it drops, and it may not sell that quickly. So they're trying to build in a bit of caution, but at the same time, you're reflecting what's happening in that data as well. So there's a bit of a no-win situation there, isn't there, playing through? But I think within this, and you alluded to it just earlier, there is some, all losers. There's some, some stability starting to play in, but there is still some big shifts happening in that sector, isn't there? Because of, like you say, what's happening in that new car market, the push from the OEMs, heavy discounting, heavy incentives, or to your point, it's just not a popular used EV proposition for the market. So what's been happening in that, before we talk about petrol, diesel and hybrids, what are some of the standout sort of movements in that EV sector?
The largest movement is a Lexus RZ in the electric sector. That went down 9.6%, which is about £225, which is pretty big, and especially coming in one hit. Did see some weak data with it as well, but you can also see some age in park, I think, in some retail as well. So they're not shifting quite as quickly as probably what the dealers were like. Citroen Space Tour, that's another one down almost 8% and sort of £1,470 overall. Kia e-Niro, but old model, not the current model, that went down 6%. Nissan Leaf, I can't remember how many times we've mentioned Nissan Leaf, down another 4.5%. That car does look extremely cheap, in terms of the retail price point and where it definitely sits in as a trade price point. It looks for nothing really. There is, one glimmer of light and hope for. There's one model which I think there's two models overall in the EV basket which went up. One of them is a mini EV. It's actually the second highest performer of the month overall, including all fuel types, and that went up 5%. There's been a bit of a recovery with that this month, and I think last month went up as well. But again, that car looks very, very good value, and I think a very good, retail proposition, compelling for a retailer, compelling for a consumer. I see the trade data come through. It's 10, 11, 12,000 pounds with really nice mileages. Compare that to a petrol. Petrol is more money, so you can probably see why it's picking up a little bit, because the gap between the BEV and an ICE vehicle is thousands of pounds, and it definitely is in the mini case as well, which seems crazy.
And without calling out particular models, I say, but you and I were speaking, and what are some of the it's not just price, is it? With some of this, because you're in conversations with the sector all the time, you're in conversations with the manufacturers, the OEMs, about their models and the rationale behind some of the movements that's happening with their models. Just as a high level, what's the kind of things that you talk to them about? Is it naming convention? Is it the product itself? Is it the relationship between models and their peers? What kind of things are you talking to the manufacturers about when you sort of discussing their price movements?
I think it's a combination of everything. It could be down to name and structure. It could be down to the push, the aspirations of market share. There's lots of different variations with it, and when you're talking to manufacturers, it sometimes can be really, really difficult. You see either weak trade data, or you see the retailers discounting down. There's lots of conversations, but there's lots of elements to it, and it's really difficult to sort of pinpoint exactly what it is. It's a combination of multiple things across the market, and it does. You speak to some OEMs, and sometimes they're genuinely shocked at some of these movements. But when you look at either trade data, or you look at some of the retail data, it's not really a surprise. So yeah, it is a combination of everything, really, Phil.
Because that's where you try and help them into with this. It's not just the movement itself. It is kind of the rationale behind some of that movement, the justification, and some of that walk up model shifts and things like that between it, that you do talk to the sector and the OEMs about.
Definitely. I think we try to help everybody when this, in terms of, because we get to see the whole of the picture in terms of the data, whereas I think some OEMs, or they only see parts of the data, maybe just their own. But I guess that peer impact as well. But we try to help and guide a lot of people, whether that's through through channel, through strategy. That's what we do. We do a lot of that in the consultancy part of the business even before the vehicles come to market. So, it's about what's your plan, what's going to be your strategy in terms of, your remarketing plan. And there's lots of elements to it, but, there's obviously volume's the biggest thing at the minute. And we're now getting to that point of 3, 4, 5 years down the line of seeing, heavy volumes coming back into the marketplace is, really influencing the overall market. And I think consumer appetite is just not rising as quickly. It probably is going up a little bit, let's say, in terms of, desirability and I sense prevails, I guess, in some cases. But in terms of what's coming down the line, it's just not growing as much as what, the volumes are, which are kicking in now. And we're seeing month on month increases, record increases. May was another record increase, but that's not surprising.
Yeah. And just to finish on the talking about fuels, what's been happening in the hybrid, the plug-in hybrid, petrol and diesel sector? What are the movements in those sort of 4 fuel types? And are there any standout kind of by sector? Because we talk a lot about the SUV sector and other sectors in that fuel market.
So hybrid and petrol are bang in line with each other, down 0.4. Now, if you think that the overall average movement is 1.1, that's a really strong result. They do make up an awful lot of the market, petrol and hybrid especially, but they still seem to be the go-to fuel type for retailers and ultimately consumers. It's just seems to be the easiest step or the easiest purchase. And those cars are fast churn. So they're the strongest fuel types overall. Diesel, interestingly, was the second strongest fuel type, down to 0.6. Plug-in hybrid down 0.9. So even plug-in hybrid gets a bit of traction. It's not, it's halfway point to the electric movement overall. Still some volatility within that, again, within where it is in life cycle and price point, etc. But and I think if you look at, to your point, in terms of some of the sector sizes, petrol's definitely seen. So I look after the hatchback sector, and petrol's definitely, done really, really well in sort of the hatchback sector. Maybe as a second car, maybe even some first cars in some cases, down to price point. Petrol and hybrid definitely seem to go to. Maybe some of the taxi market as well is still having that positive effect in the hybrid, and especially for some manufacturers. So it's been very, very varied.
Yes.
Overall this month, and it's been fascinating again to watch.
Yeah, definitely. Well, thanks for that. And we'll be back after this short break with more from Jeremy's take on some of the key trends that have shaped the first half of this year.
You're listening to All the Chatter That Matters, a special weekday episode of Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising.
Jeremy, you've outlined the stability of the used car market in June, as reported in this month's CAP HPI editorial. So we thought this would be a good opportunity to ask you to look back at the first half of the year. Now, what were the key trends that you've tracked, and what do they say about the state of the used car market at the moment?
A really good market overall. Every month is either, I think we've had 1 month which has been on par, which was March, so February into March was 0.4 in terms of the seasonal average. Every other month this year has been behind the seasonal average, or ahead of the seasonal average. So I think we are overall, we're down 0.9 is a cumulative move, including your plate uplifts, so 3 years 60. That sits smack bang in the middle of our cumulative tracker from year to year, going back to 2015. We've had this period of, I guess, this even stronger latest month, which has put the curve slightly ahead of other years where it was tracking probably more in line with 2016 and possibly 2017. Now it looks like to be recovering. It could be, closer to, I guess, over the course of the year, maybe a 3% overall, including the plate uplift drop, whereas a more normalized year or a more normal year, it would be sort of between maybe 5 and possibly even 6% as an overall movement for the year. So we'll probably sit somewhere smack bang in the middle of that. So it's still a really good year. Yeah.
And one of the conversations we have on a monthly basis is EV values, and you've just talked us through how they've performed in June. But they, as a whole, overall, they've been coming down progressively now for a long time, and it kind of sort of begs the question: when are they going to start to level out? And any thoughts on that and how they performed over the first half of the year?
So the backdrop of the year being quite strong, obviously that does exclude EVs. Just for example, EVs have dropped this year by just over 11%, whereas petrol's dropped just over 1% or not even 2%. So I think therein lies, and that's just after 6 months. So yeah, in terms of, EVs have dropped, I think since September 2022, 70% fall. Whereas you've got, hybrids now been during that period, hybrids still in a state of inflation from the starting point of the COVID year of Feb 21. So, but in terms of this year, really, really stable across the board for those, traditional fuel types, just EVs, which seem to be falling away. And you just can't quite put your finger on it, as to when it's going to stop. To be honest, we thought it had. We thought we saw this plateau period of sort of the back end of last year or the autumn period where values started to stabilise, but they've just continued to fall. And as we've got into probably past March or April, as February and March this year, to be honest. So yeah, we just don't know when it's going to stop. And as we said earlier, with that self-fulfilling sort of downward spiral in terms of, I guess, that safety that people are building into within their bids, who knows?
Yeah. So there's still, you think there's still room for them to come down even more, maybe over the next couple of months before
I
they
think
start to level out?
Yeah. Based on current performance, yes. But in terms of sense, it doesn't make sense for a lot of those, older models in the market, which do look at extremely good value, but continue to fall, other than mini EV, which I highlighted earlier. So there's got to be some common sense prevail at some point, but when that's going to be, who knows?
Yeah, I'd agree with that. To be fair, I think there's going to be volatility, but it's going to be specific makes, models, age profiles, isn't it? But you do expect, or you'd want to start to see that, get some parity or even increase in some of this EV products, particularly that earlier stuff that now represents good value to the market, doesn't it? So, but I think it's very difficult now that there's no one, from a forecasting perspective, it's very difficult now to forecast and say, okay, the sector is going to be stable or it's going to return to a normalised depreciation, because within it there is going to always be these shifts of certain makes and models, isn't there, which we've talked about earlier.
Definitely. I feel sorry for Dylan, to be honest.
That's Dylan's problem, isn't it?
Trying to pinpoint something sort of, even as an average drop, it feels impossible at the minute.
Yeah. I mean, I can't remember what Curtis wrote down for the month of June going into July and what you said on the last podcast.
0.6, I think it was, Phil.
Yeah, it was 0.6.
Yeah. So, I mean, crystal ball time. We're heading into the month of July, third quarter of the year, a little bit of a holiday period coming up. I mean, what's your view? What do you expect prices to do? We've talked about EV now to death, but overall, what are you expecting? What does July into August look like? What's the seasonal average? What are you expecting as we move through this first part of the third quarter?
Seasonal average is 1% down. I have no reason to think that it's going to be anything above that or worse than that. And I think it will sit anywhere in between where we've currently ended up on this month to where the seasonal average is. And I appreciate that's probably a little bit of a wide point for, if I was a betting man, I would probably say it's going to your point, summer holidays are going to start. They do start earlier in Scotland, of course. I think they start at the end of this week or beginning of next week. So they do start a little bit earlier. So there will be some disruption with holidays. But again, I just think it'd be probably more in line with or closer to the seasonal average. It's probably a bit of a cop-out saying that. I don't want to... it's going to be 0.8, but, it could be. But then supply's lowering as well.
Yeah, no. You're right. I think it's just giving the market that little bit of sort of insight and sort of confidence, I suppose, to a degree that, vehicles are now depreciating. Yes, but it's more towards that seasonal average. But we'll see. We won't hold you too closely to it. No one no one remembers
Thank
too much. It's all right. So I think, huge thanks for coming on again. I think, always with these things, it's about giving the listeners a bit more context behind those headline figures, and the conversation around EV, I'm sure, gave a lot of insight into those movements around that headline figure. And obviously we know that I think you've got a webinar coming up on is it the 9th of July at 2 p.m. is your next webinar, and that's now available for people to sign up to if they've not already signed up to it.
Yeah, sure. And if anybody wants to have an invite for that, you don't have to watch it live. You can watch it back on the recording. Reach out to me or to any of the guys on our LinkedIn feeds or directly, and then we can get you a link sent over for that.
Yeah, and I think Chris Plum is at the VRA AGM next week presenting, but I know you're there as well, so it'd be great to see you in person, Jeremy, after such a long time. But I think there's still availability for anybody that's not signed up for the VRA AGM down at Perry Bar. That's still available. Chris is doing a market update there, and the editorial is now live and available, isn't it, through any of your social channels, or if they go to cap-hpi.com, they can download the editorial there and the one for LCVs and bikes and forecasts as well, can't they?
Yeah, everything's on there. All got uploaded this morning. So today is publication day. So everything will be there. But again, we shared on our LinkedIn feeds, and I shared it this morning. So yeah.
Fantastic. Well, it's always a pleasure having you on, Jeremy. It's always great chatting through this. And I know we could sit and talk about the market and data for hours, but always a pleasure getting that sort of bit of detail behind the headline figure from you.
Yeah, my pleasure. Thanks for having me on again. That's great.
So that's all for now for this special weekday Motor Trade Radio podcast. Many thanks to Jeremy for joining us. Thank you for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.